Good morning. It's Chris from Solstice as well as Axel. We are on Twitter, Instagram, website, Discord. You can DM me or get a hold of me through Solstice ATR. Remember, this adaptive algorithm is used for side market, up market, as well as down market, whether it's momentum, non-momentum, and supply and demand zones. We try to trade what we see on the charts, not what we think. We're not a broker dealer. Our past performance doesn't give us any indication of our future results. Remember, use this at your own risk, and it's for educational use. So let's go to the first slide right here. I did this last week and I covered some sections in it. I'm going to zoom it in a little bit so everyone can see. You can take a snapshot. I put the commodities or the futures right here, as well as the bond, as well as the banks, the transportation, crude oil, gold, Dow, Russell, Nasdaq, and as well as the S&P. And we put down here the Aussie dollar as well as the Japanese dollar in relationship to the Aussie. I put some stocks here on the FANGs such as Apple, Amazon, Google, Microsoft, Netflix, and Tesla. We put Costco, MGM. Costco reported last week, did very well. I put General Motor, Blackstone, Amgen, Hog, MasterCard, AMT, Lulu, and so on. Johnson & Johnson, Guild, and Starbucks, Baba. And I duplicated Lulu. I wasn't even paying attention. We can fix that later. On the ETFs, I put some of the ETFs in the commodities, also some sectors in the S&P, the Nasdaq 100, couple of real estate, as well as different sectors from Schwab, mid cap, large cap growth, dividend, SPLV and SPLB in relationship to the tech sector. So we want to make sure that you understand the differences between what the VIX does, what interest rates do to the market in relationship what the announcement came in on Friday after the close that Moody had downgraded the bond market in the US. So pay attention to the dollar on Monday and what the reactions are between the Asian market and the European, if we're going to do have continuation or not. Let's go to the next slide. Remember where you can find me. That's our website. Get in contact with us. You like this video, hit the commentary, subscribe, share it with your friend. Let us know what you think. I'm going to go to the S&P 500 here, and I put the weekly showing the COVID-19 high as well as the March 23rd low. Rally up, consolidate in 2021, close around up here. Then we had the January low in 2022 and December high in January 3rd of 2022 all the way to October 2022 low. We rallied. That was the December low. We had a January and we rallied up. We retraced and coming back up. So I want to talk about this a little bit more on the daily chart as well as the 4-hour and the 39 minutes. So let's go to the daily. And what I wanted to show is the April high in relationship to the May. We had this gap, which we filled up. We had this gap, we filled it. We rallied up, came back down. But I left the gaps on the right by themselves. And the reason behind that I wanted to show, I'm going to put my mouse on that downtrend channel that I have, which is not, I'm just calculating the dump from the annual high of this year. You can see we had a 10.63 decline from the highs of 727 all the way down to the lows of 1027. We rallied back up. We broke that downtrend channel. And I put this line up and I said we can get a 17% on the yield going higher. As well, going down, we lost a 10.63 on the way down. So if I go back to the weekly, and I wanted to show it for one reason, if I put my mouse on this candle from the low to where we are no, we haven't reached the top, which is about 17%, and I wanted to have this up there to show the total return. This is showing the 12% here, but if I hover edit the property and I put instead of hover allow, it's going to change the count from here. If I grab it from here, the line all the way to here, you're going to get a 12% up. But if I take it all the way to the top, that's a 17%. So we have to pay attention to what the market offers us, not what we think. And let's go to the gap. And I wanted to talk about this gap. I'll show it on the Nasdaq as well on the weekly before I come into the S&P NDX. And I'm using these two because one has a lot of lines on it One doesn't have any information on it. It's more cleaner. We can see the January 3rd of 2022 high and the 10-10-22 low. So we know with the December low and the January, we rallied quite a bit. We retraced, but the Nasdaq was a little bit more stronger. This gap was filled here on the way up. We came back, retraced to that area, ran back up. So the most important thing, we are in an uptrend. Even if we come back to this area here that I have this oval, there's a gap here in the charts on the daily. So let's go to the daily chart. And on the daily here, if I zoom in, you can see between this candle and this candle on the rally on 525 area and the 523, we had this gap. We continued higher. We never retraced to this area. And this is why I put this oval here in case we end up coming back down. But unfortunately, we didn't. We rallied higher. If I zoom from this area all the way down to here, we're going to see some of the gaps on the way up. You can see this gap here on the way down. There's another gap here. Even if I mark this gap here between here and here, or this candle, I should have a space in there to tell, hey, by the way, we do have a gap in this area. And if I extend it to the right, we edit the property and we go till 12. And we can see where that high is in case to fill the gap. On the way down, we have this gap here. You can see it. And there's another one right here, which is a smaller one. So if I edit the property, I want to make sure, even if we come back to this area down the bottom, that everyone is aware of these gaps here, as well as this one. That would be the 61.8 gap on the way back down. So if I put 12 on it, I use just the box down here to create those gaps, and I color them in gray so they are visible online. So this gap was here. We had it. We filled it on the way up. We came down. There was a tiny little one between here, but these wicks have touched, so they're not valid. There was one here. You can see it between here and here. This was filled, and we continued higher. If I zoom here, even coming back from this high to this low, coming back to fill partial gap here or coming back here, it's an opportunity to buy the market. We are still in an uptrend. If I take this on a, let's say on a 10-year, instead of the weekly, we go to a monthly bar, we can see we are even still in an uptrend, and the monthly bar is not engulfing this candle yet, but it's still in an uptrend. Even if it consolidates and comes back down here and continues higher, that is okay, because we are still on the monthly bars in an uptrend. So if I go back to the daily, like we talked about in this area here, what I want to do here, take this and break it down a little bit more in detail. And what we do, we go to intraday. On the daily, I want to go, let's say 20 days. I want to use a 39-minute. And everybody goes, why are you using a 39-minute, not a 30-minute bar? And there's a reason behind it that I'm using a 39, because it counts the bars correctly for us due to the trading as well as the gaps in between the charts. On the Nasdaq now, we can see where those gaps are on the 39-minute right here, and there's another one right here. I have even coming back down on the daily to the 116 SMA, coming to this gap, coming to the 200 or the 250 SMA. It's an opportunity to buy the market. If the interest rates, and Moody has downgraded the bonds in the S&P 500, pay attention to what the market offers us. Let's go now back to the SPX. And I wanted to show this as well on the daily. We had this oval here. We left it alone. You can see here I marked this bar and it's showing us a 12% return. I mean, we are in an incline, and last week we were range bound. We fell back down due to what the announcements were on Thursday, and Friday we got the rally up, short squeeze into the market and continuation higher. So if I zoom in here, we can see that there is a gap here. Okay, we'll just mark it so everyone can see it. And we extend it a couple of days. We're not going to do what we did in the other one. So we're going to extend it like 3-4 days so it's visible on the eyes. We have another one right here. Even if I take it down to this one right here, you see it? It's not fully gap fill. If I take it down to here, that's the lowest bar, and I extend it to the right couple of days, we can see where that gap is. So more importantly, pay attention to these gaps, the 116 SMA, as well as the 200, 250, and the 200 SMA, which is in white and a cyan color or baby blue. These are version control pivots. You can see the purple ones right here that haven't been touched. If I look, there's 1, 2, 3, 4, 5, and we developed 6 on Friday. So these are VPOCs. These are what we call where most volume has traded on the S&P. It can be on Nasdaq. It can be on Apple. It can be on any stock. These are never been retested. Sometimes in the future we retest them, like on the way down when we were coming back down. On the way back up, we retested. All these VFOCs are no longer valid. So this is how you look at it. We're going to look at that NYFANG, and I'm going to go to the VIX. We're going to go to the daily to show you how the tech sector has performed in the last week or so. If I use XLK, it's a similar to the FANGs. This is Apple, Amazon, Google, Microsoft, Meta, Netflix, Tesla, and so on. We can see that the strength of it on reversing from a down linear regression downtrend, or what we call a flag. This is the handle of it. This is the flag, and we're breaking up. Even if we retest up here, if we end up continuing or not, we have to pay attention, because remember the FANGs, that high is right here from the prior year, and we have to pay attention to November 1st of 2022 highs if we end up breaking up and continuing high, because this year we made a new high in the FANGs. Let's take a look at XLK, and we can see where they are. We're going to pay attention to the ZB. ZB is, you can look at the TLT, ZF. The ZB is the 30-year Treasury. We can see on Friday we had a consolidation. We were rallying up, but the downgrade, we have to pay attention if we are still in a downtrend, or we're going to find opportunity to reverse back in the interest rates. And if I use the TBT, TBT, this is the ETF for the 20-year treasuries. We want to make sure when we're looking up, we don't fall. This gap was retested. You can see there's a portion still here. If we retest it, hold the 38 to continue higher, because we have to see if the Federal Reserve still going to bring interest rate inflation down and keep interest rates up, or they're going to slow down. This is very important to pay attention to it. And last but not least, I want to show you the dollar, the DXY with the VIX. This is the DXY, and what I wanted to do on the weekly, you can see where the weekly prior year low to high, I measured it. Every time we retested the 61.8, we got rejection. We are holding the Fibonacci from the prior year 50%. But if I look at the highs and lows, I got support and resistance, the machine marked, and that's where my 38.2 and the 18 SMA are holding. If I come into the daily chart will show me that we are in consolidation. Ever since the prior year, the candles had bodies to them. As of July, going up and consolidating here, you can see we don't have bodies. We got wicks up, wick down on the spikes of noise in the market. They ran it back up on basically spiking up the volume and spiking it back down on both sides of the market. So we have to pay to the European dollar, the Australian dollar, the Japanese dollar in relationship to the American dollar. So let's go to the VIX, and I wanted to show the VIX. Every time we had a spike up, we had a dump in it, and we consolidated around the $13. We rallied back up. We didn't make it to the 25 and that channel up here in order to continue and break to the second channel. If I go to the weekly chart and I want to do a 3-year weekly, I don't want to go that far out. Let's go weekly. We can see that every time we had the spike up, we came down and we had that downtrend channel. We found consolidation here. We rallied up and we fell further down. The RSI is showing it's a downtrend. Do we get support at the 38%? Do we, in order to continue lower, or do we reverse back from the mean? So we have to pay attention to what the market offers us. And I want to show you how to do the measured move. I'm going to use the micro ES. And on the micro ES on the weekly, you can see I left these gaps here and marked them on purpose to show it on the chart. We are in an uptrend. This is coming all the way from March 26 of 2020, as well as the 10/13/2022 lows, which we touched, and we're still in an uptrend. I had put that oval here, and when we were coming down, I was thinking we'll get a 13.9 reversal down before we get a bounce back up, but we bounced up a little bit more better on the Nasdaq instead of the S&P. We're still in that downtrend channel. We can see that we are still in the downtrend. So what we're going to do is go to the chart. We're going to go intraday. We're going to do 20 days or 30 days. It doesn't matter which way we do it. We're going to put 4-hour charts here. On the 4-hour charts, what we want to do is basically look at the range. This is a gap at the high. We filled a portion of it, which we haven't filled all of it. Even if I activate it and bring it here, we still have that little area to cover in order to continue. I can fix it later on charts. There's this gap here. The overnight is in the gray area, and the trading hours, which are US markets, are in the black area. And I had put the overnight up to show you where the gaps are, because if I go in the style setting, okay, if we do the style setting and I go equities or futures, I can either show extended hours or not. See, this is extended. This is not extended. If I push apply, now you can see where the gaps are in the S&P 500. This is the reason why we put this stuff up, because it shows us where the gaps are. So if whether I activate it or not, it'll allow me to know where those gaps are in relationship to the market. And you can see on the top, we wicked it and came back down to close right on that bottom of that gap. We didn't 100% clear it. And even if I come back to here on that time frame on the 4-hour, it's going to tell me where we are. Last week's range is very narrow. This was the Friday's high. If I take a look at from high to low, this is the small range. If I get it in here, let's do the measured move. This is the instrument I use. I grab the high to this low here, and we're going to extend it to Sunday. It is prior last week, which is the 5th. Bring it back to the 5th so everybody can see where that level is. This is very narrow. Even coming back to the zero line and retesting the 0 to minus 25 to 20% area and bouncing back up, that's an opportunity. Even if I come back all the way to the minus 80, 100%, that's an opportunity for us to purchase the market. You can see where the high and low is. The machine marked it between the 0 and the 100, 61, 50, 38% is F3, and there's a 23%. I don't have it here and built in its program, and I don't have the 78 built in, but usually I use the measured move, which are units of 20, 25, units of 10. It's easier to calculate to see the extensions to the upside or extensions to the downside, and we can see where the virgin control points are on the S&P 500. You can do the same thing on the charts, not just on the S&P 500. You can do it on Nasdaq, Apple, and so on. So that way it allows you to trade what you see. And the bottom indicator is an RSI, and the RSI that we use goes between 80 and 20. You can sometimes get extensions above the 70-30. Most people use that. We use an 85 to 90 and 20 to 15 and 5 down the bottom. And the same thing when we're going up and coming back down. I have an average in it. Every time the average crosses, it gives me an indication of change in trend. Every time we get extended to the top, it either consolidates for a while before the reset or continuation. And same thing when it gets to the bottom, it kind of consolidates. It can continue lower and reverses back from the mean. So trade what the charts offer you. If you have questions, once again, get in contact with us at Solstice ATR or give us a call. Hit the smash button. Let us know what you think. Over and out, and enjoy your weekends.